Consumers can expect to pay more for goods and services for the rest of the year. Private sector economists have raised inflation forecasts amid higher energy and food costs. They are also lowering Singapore's growth forecast from 4 to 3.8%. However, they say the risk to the labour market would be minimal if there's a potential recession or stagflation. Now, stagflation occurs when there's slow economic growth and unemployment coinciding with rising inflation. Brandon Tanoto has more.
Higher commodity prices and supply chain disruptions. These are among reasons that propel inflation higher. Singapore's core inflation rose to a 10-year high of 3.3% on year in April. Core inflation doesn't take into account accommodation and private transport costs. Analysts say the current environment will also keep inflation elevated before it tapers.
But that easing off towards the end of the year is because of the high base effect in the same period last year. So it doesn't mean that prices actually, is going to fall. It essentially means that prices will rise at a slightly slower pace towards the end of the year.
Economists surveyed by the country's central bank expect headline inflation to come in at 5% this year. That's up from the 3.6% estimate in the previous survey. Headline inflation includes accommodation and private transport costs. And if inflation is sharper than expected, it could slow down economic growth.
Every dollar you earn you can buy less and less with it. And so that means if your purchasing power starts coming down because your inflation is outstripping your wage growth, then there is less demand for goods. We cannot buy as much. Therefore, the demand for people to produce these things, the workers you need to produce all of that would start coming down.
A weaker consumer demand means companies will earn less, and this could lead to firms hiring fewer workers or holding back on raising wages. However, there are bright spots, especially for sectors like manufacturing because of the strong demand for semiconductors. And as the economy reopens, the wholesale and retail trade sectors are expected to have brighter growth prospects too. However, the outlook is not as rosy for construction, accommodation and food services, partly due to higher operating and material costs. Still, these industries are projected to expand, but at a slower pace.
Now, Singapore has maintained its full-year economic forecast for 2022 at between 3 and 5%, but it's expecting growth to come in at the lower half of this forecast range amid a weaker outlook for external demand.